not the only bad sheep in this play. CZ plays also an important role, and like you said, we can't trust any of these exchanges. So why don't we educate everyone who's here and everyone who's getting involved in crypto and tell them that the idea of the
Yes,
inventors
Kim, thank you
was
for saying this. Bring it back
was
to like
not
the
to
core issue here of like self-custodying
exactly
your assets.
exactly
Your,
self
if
custody
it's
is what
not,
you want to
if
do.
they're not your keys, if they're not your coins. They've been saying this. It has not been a meme this whole time. You literally don't own shit if it's on a
Yeah, and just
centralized exchange.
because people are used to the traditional system of banks and credit cards, and that's just how they were born into this financial world, it doesn't mean that crypto should be the same way. Exactly not. The reason crypto was invented was to get out of that system, to not give third parties power over your assets. That is the whole point of crypto. And then the other point of crypto is don't speculate with it, actually use it to pay for stuff, because that's how we break the financial system that's currently in place, that's ripping everyone off with inflation and all this bullshit, with endless money printing and corruption and fraud. If you want to beat that, hold your own cryptos and actually use them in day-to-day commerce. Pay for stuff with crypto and refuse using the traditional system. That is what crypto is all about. And I think people are not getting that. There's way too many people that trust exchanges with their crypto. It's crazy.
Yeah, and
It's
I
just
mean,
a
I think. Oh, go ahead, Mario.
no. Go ahead, man.
I was just gonna say, I think a lot of that breaks down to, how they tried to bring in mass adoption, and we see the heavy marketing tactics. So you see the names on stadiums, on every Formula One car, on every UFC fighter. I mean, it's what draws in the masses, and then they don't know any better whether to stay on those exchanges or what to do from there.
Or
And
rewards
so
for keeping your crypto there.
this is also true. And if you don't know, yeah, 100%. And if you don't know whether to keep a very finite amount of money there, then you can get in trouble. And case in point with that. But also with the case of CZ, like, yeah, he could have acted ill-intently, but I also think that his hands are also tied, because what I mean, to go into a due diligence period and come out in 24 hours, that doesn't happen. And so what he saw was what was happening was criminal activity, and so he immediately said absolutely not. And a lot of his, I think, push in the direction of okay, like being okay with this, is the fact that Sam was heavily pushing for regulation, and to not his moral compass, but people that he was aligned with. And this was apparent because if you go back into previous conversations with Sam, he was a big proponent against KYC for things like email. But then in recent interviews, and I'm sure many people have seen it here, he was pressed on the same matter of why would you KYC for a wallet, essentially, essentially your keys. Why would you have to tie your identity to your keys? And there's a lot of reasons why. Just think to yourself, would you want to KYC your email? And then it's the same application. There's a lot of privacy and things concerns to attach yourself to all your financial
Rob, can we go back to something that you touched on? Because I think it's actually pretty important, and it touches also on what Kim was saying, but it also creates new questions for us. So one, it seemed quite clearly that Sam had the information last winter, maybe February or March, that many, if not most, crypto exchanges were insolvent. It also seems that CZ had many of those ideas, if not confirmations, that have recently become confirmations. So two questions Kim really posed to you. One, after CZ discovered these things, what would have been a better way for him to roll out that information or protect the community? And then secondly, how much, if any, would you speculate that Binance could be potentially participating in any similar fraudulent activities?
I wanna jump in real quick on that. I think we absolutely know that there's a high possibility that Binance at some point since 2017. I was there for their ICO as well. Has been doing that stuff. I have a couple points I just want to throw back at Kim or anyone else. While I wholeheartedly agree with the ethos and everything you're saying, Kim, there is like several things that we should look at just from another perspective. And this is not saying this is the right perspective. It's just another perspective than yours. Is, Binance has been, and first of all, I own no BNB. I have no investment in Binance. I don't even have any of their accounts. I take it back. I have a Binance.us account with, I think, $1 or something in it. I don't have any money. So let me just get that off the top right there. But Binance was one of, if not the best exchange over the years, and this is growing from 2016 myself, that we did actually have a centralized exchange to do certain types of transactions on when other exchanges were not providing those things. So, and this is not anything good or bad against CZ. This is just what it was. And whether I agree with your sentiment about how it could have been handled by CZ. For sure, 100%. But what, like the gentleman said, Rob said earlier, what do you expect him to do? I know this. If I had $2 billion worth of an asset that was worth zero, and this person is not holding themselves or accountable, and to what Blau was saying earlier, fragrantly being just irresponsible at the least with it. I'm going to push the eject button too, because at the end of the day, CZ. And all of us are so selfishly motivated to a certain extent. So I 100% understand what you're saying. I agree with it, but again, at the same point, it's like, well, what was he supposed to do? The second point is that, excuse me, I won't say the second point. The other point is that when you talk about people should be spending crypto and spending their crypto and all that. Again, I agree. I would love to be spending my crypto, but let's not make things abundantly clear. It is not just easy just to go and spend your crypto. I can't go to the 7-Eleven and just spend my crypto like I want to easily with what? With two rails, which one of them I do have right now, which is crypto.com. And I'm going to go into that real short, which is super shady. I was part of I was invested in them very early from the beginning, and they have a bunch of shady shit. By the way, Mario, I was itching to ask crypto.com a bunch of questions. I would love to, and if they're listening, I would love to have them back on, because crypto.com need to be held accountable. I won't go all into it, but long story short is they did this funny, super shady exchange back in the day. They had their original token was MCO. They introduced this CRO token out of nowhere, and then through some sort of Ponzi-nomics, they made us all give up our MCO and have to switch over to CRO. That's a whole nother story, but lots of shady stuff going out there. Oh, what do they have? I live in Los Angeles. Down the street is the Crypto.com Center. Super shady. I'm going to say this. I do not trust Crypto.com at all. I have their card, and I have that little couple $100 to have their card. But even then, the card doesn't even work that well to buy purchases. Second point is how else can you buy purchases and purchase? Through BlockFi. But what happened to BlockFi? So while this is not coming against you, Kim, in any sort of bad way. But I'm just saying practically, we're not there yet. And then my last one of things, I want to give super duper flowers to our friend on stage, Cuffy, for coming out, because you pressured him really good. You grilled him really good, Kim. I ain't go front. And rightfully so. And Cuffy came out with a lot. He was very uncomfortable, but all 11,000 or 12,000 or however many are in this room really benefited for that, Cuffy, and you didn't have to do that. So I just want to give you your flowers, brother. I appreciate you. But I really would like to know, Kim, what do you expect? Like, I get it, but one more thing I want to add there too, and this is with all due respect, but you're not in the position that most of us in. We are free people to move around and do what we want to do. So we can spend our cash. I can spend my dollars. I can spend my credit cards. And again, it's just not practical at this point. Although I'll make it super duper clear, I would love for it to be practical that I could spend my crypto. I'm done.
Yeah. Chat, I just sent you, before you go, Kim, chat, I just sent you through, did you see it in the group chat? The Sam in Argentina? And you're looking into it.
Yes, I am reading that right now, but it appears, I've got to look into this, but it appears they're basing that data off of that airplane, but let me look a little bit further.
Yeah, but what about the conference? That's the first time someone says that they're giving a conference. And I've been getting a lot of DMs for hours now. I didn't send you many of them about Sam, since we started the space, about Sam heading to Argentina. So I don't know if it's just rumors spreading like wildfire or there's some truth to it. So if you could verify that, that would be great, man. Kim, you were speaking, sorry.
Yes. Okay, so I first of all, Ninja, I agree with you. We should give Coffee big thanks for coming here and, talking about this. I appreciate that. So a couple of things that you said that are quite important. Why is it that most retailers don't yet accept crypto? It's because crypto has not been used the way it was supposed to be used. Not enough people are using it and demanding from retailers to sell them stuff for crypto, right? If users were shopping at places, but just let me
finish.
I
may just add like an easy answer to that, it's. I mean, think about it. Your bank account is FDIC insured up to $250,000. So if you have a business bank account with Wells Fargo, Chase, whatever, that money is insured. Whereas if you keep it in crypto, that money is not insured. So, I mean, that's ultimately why. That's why any lawyer for any company will tell you want your money in a bank simply because it's insured. Like if the bank gets robbed, if the bank becomes insolvent for some reason,
they'll tell you to have multiple accounts for that reason too, because you only get 100,000 FDIC insurance.
You take your $1 million and you put it in 4 different bank accounts. Therefore, it is insured. Yes.
Yeah.
Yeah, but
sorry,
we're not
Kim.
just
Didn't mean to
talking
cut you
about
off.
we're not just talking about the US here, Coffee. In Europe, for example, the banks can gamble with your money. They don't need to have any such insurance. And like we've seen in the financial crisis in 2008, they could basically stop you from withdrawing money because they didn't have enough funds. So, yes, there's some banks in the US that have this kind of insurance layer, but the US is not the world and crypto is truly global, and you don't have that in many other countries. So, that doesn't really fly with me.
Can I also add, FDIC insurance only has 1% of the total insured deposit. So if more than one systemically sustainable bank, there is no insurance. It's another Ponzi scheme. So
thank you.
It's just
Simon, you're scaring me, man. You're telling me money's a lie, bro. You're telling me it's all a lie, bro.
But your
of course it's all a lie.
Unfortunately,
they just financially gangbang you with their banana chips.
But that's not the reason why.
Well, there is still only one world reserve currency. It's the US.
No, but I understand. But that's what self-custody solves. If you don't leave your funds with a custodian, then there's no risk of that. You could lose them. It's another risk. You could get hacked, but that's what self-custody solves. So you don't need to leave it with a custodian.
I tweeted recently.
Hold on.
Too much competition.
I haven't finished my answer yet, so everyone needs to chill. Okay, let me do that first because I think this is a very important question that Ninja asked. Right? Why don't all the retailers already accept crypto? It's because we did not use crypto as intended. All the speculation, all this trading, NFTs, all this bullshit is not what crypto was about. Crypto was about you changing fiat to crypto and you demanding from retailers, if you want to have my money and money talks, you need to accept crypto. And if everyone would be buying from retailers, and there are thousands of them that are already accepting crypto and not from the usual big retailers like Amazon, well, then they would have to change their attitude and they would have to offer a crypto solution. So it's really up to us, the users, to shop with those retailers that accept crypto.
Think about where it all began. This is a great point, and if there are any Bitcoin maxis listening, they're going to love what I'm about to say. But think about the only singular, entirely decentralized blockchain and coin, for that matter, with a finite supply of
Chia?
Bitcoin.
Chia?
No. Don't shill some random shit coin.
But Kim, do you
not a
think
random
that
shit coin,
you mentioned
dude.
Amazon? You mentioned Amazon. Do you think that Amazon is going to be creating their own tokens and their own coins? Because you say, hey, people want crypto,
Yes.
should be demanding crypto. But
why would you think they aren't already using their own tokens and own chain for inventory management? Like, why do you think that like node infrastructure, like enterprises are using these types of technology in enterprise?
No, I'm asking. I'm asking.
But this gets to the key.
Omakase is in the cut. I see what's about to happen. Okay,
this gets to the key, right? The Amazon already has its own currency, it's Amazon credits and their own rewards loyalty. But because it's not tradable on an exchange, they can actually manage that process. So the reason that people don't spend crypto is because they believe that it's going to go up in value, and then they spend the fiat that they believe is going to go down in value, and that's why stable coins was had to be created on top of it. But it makes no financial sense for you to spend something that you believe is a long-term store of value, and that's why all of this existed, because people wanted to borrow against their crypto so that they could spend money that they believe goes down in value. And that's Gresham's law. That's economics. You can't change human psychology of wanting to keep the asset that they think is going to go up in value and spend the thing that is going to go down in value. That's why velocity exists, and that's why money printing is to encourage people to take on debt in order to stimulate a market. It has inflation, and then they try and send you bankrupt by increasing interest rates when it goes too high. So you're not going to be able to change these trends. You can change the technology, and you can integrate a way of spending fiat currency on hard money.
Yeah, and besides that, why would Amazon take that risk? You know, they don't want another Ripple 2.0. I mean, we saw what happened with Facebook and Libra and how much they had to write off. You know, that's kind of a case study of, you know, big tech trying to launch their own token and how much money they actually lose from doing it and the regulatory impact that it has. I don't know if you saw the fine Telegram got for their Ton blockchain and their supposed unregulated ICO, and the SEC came hard after them. So I honestly don't see, unless there's a regulatory framework in place, which there's not, I don't see big tech companies launching their own token. I mean, even OpenSea doesn't want to launch their own token because of the regulatory problems that it potentially will bring them. So, you know, anyone that's, as CZ did point out, and I agree with everything you said, Kim, you know, these guys are doing financial bloody tomfoolery with your funds and, you know, printing their banana money and sending it to everyone. So if you don't own it, you're going to expect them to do whatever financial engineering you want with it. So, and I guess that's why you know, a lot of these companies are afraid to launch tokens, because the fact that, you know, they can just print this banana money from anywhere and that the SEC are going to come down hard on them or they're going to lose customers. It's just too much of a risk for them to do anything with that. And I know that from point of fact, speaking to a lot of them in terms of what they want to do in terms of building on Web3, they would rather build something that they can bring their customers in or do what kind of Instagram have done and partnering, you know, with Polygon, etc.
Yeah. Simon, you just made a very important point. And that is why I was never a big fan of Bitcoin as a store of value. Because what you have just described, this greed that makes us choose between speculation and utilization, is what was created with the way Bitcoin is today. And that is not how Satoshi designed it. And that's why I am not backing it. Right?
No, it's the fix. You can't change that, Kim. It's the fixed supply.
No, you can.
Is the fix. If you want to change that, if you want people to spend it, then make it an inflationary currency. Then people will spend it. If you create something that has a fixed supply, that's the world's first digital scarce, then that's why you end up with situations where you leverage against it. It's just human psychology. You can't, if you want to change the economics, if you want to build a currency, that's essentially what Ethereum did. People started using Ethereum because it didn't have a fixed supply. Now they've changed it to try and get more into the store of value narrative. But originally, they wanted to create a token for pure utility so you could build smart contracts. And so they deliberately didn't create a fixed supply because they know as the price goes up, it ruins your utility. So it's not speculation. That's long-term story.
And one more thing.
I had it. Wait a second. This is important. No. I need to reply to this. So just give me a second. This is really important right now. Very, very crucial discussion. A couple years ago, I was in a clubhouse talk with Bitcoin maxis, and we had exactly this discussion. And my whole point was that by changing it to a store of value and basically turning Bitcoin into gold, they have defeated the whole purpose of crypto for which it was created, which wasn't to see it as a speculative asset, but as something that people actually use day to day.
Let's go, Kim.com. Let's fucking go.
How did it happen? The reason no one changed
really
it
became the problem with crypto is these centralized exchanges.
No, hold on. Sorry,
whether or not
back
you
to
can
that.
on ramp or off ramp and making you prove your identity in order to do so.
But the reason it became a store of value is because Satoshi designed it with a fixed supply. If you create something and it gets
with
traction
a fixed supply with like a tapered curve,
it doesn't necessarily have
if Bitcoin didn't have
the core could be updated and probably will need to be updated in order to create some type of trailing emission to support miners once emissions end, because transactions on
there you go. If you want
has more transaction volume than Bitcoin does. I mean, we all have to acknowledge that numbers are numbers, right? So it's like if people aren't actually utilizing the currency as a currency and spending it, if I can't go to a website, all of Web3, all of the value that was asserted, the venture capital that was applied with leverage to build product, meaning source code that got shipped, deployed on chain with actual static React front ends that people who are pleboids who can't use a command line could use to click buttons and publish messages to the blockchain. All of that technology that was built to extract capital from people, not built to allow people to do transactions. No one has built a plugin that lets you go to Shopify and says, hey, okay, we'll be your middleman. We'll process the credit card transaction on Shopify. We'll just do a little widget API, pay us in USDC or DAI, done deal, moving on, right? And because there's the incentive, there's no 50x there. There's no 100x there. So if VC wants to,
this is a very common technology.
Yeah, I don't know where you're at.
Look, the reason
Kim, you were trying this one little small note though, because I hear everything you're saying, and I honestly I really appreciate all your points, but there is a little small note. I'm gonna rewind it back. You try to throw NFTs under the bus with all that other shit. Let's be clear. I don't know where you're at.
Dude, I mean, people listen to me. No.
Kim, I'm gonna hear you out.
People paying millions of dollars for pictures.
No, rewind.
It's fucking bullshit. Bullshit, dude.
Fucking rewind. Let's just be clear. NFTs have a community aspect where you're paying $1, $10, $1 million that you're not going to understand unless you're a part of the community. You're not going to understand unless you're meeting people in real life. Hold on. No,
hold on, Ninja. Can I be the bridge between these perspectives here? Because I make NFTs and I'm an artist, and I agree with Kim.com that paying $1 million for a picture is fucking stupid as fuck.
So rewind, though. We're not. Hold on. Let me finish.
Okay, can we not talk about NFTs? Can we just keep NFTs out of it?
Because you want to talk about all this other stuff, which is fine, but I'm just saying, don't throw NFTs under the bus when you have no idea what's actually happening.
I mean, I think they're part of the conversation. I think it's funny that customer funds from Celsius and FTX were used to buy like massive. I mean, and this has been going on in the art world forever, right? I mean, like, look at Pollock, right? Like, that was all planned. Pollock was a pump and dump, you know what I mean? But it just kept pumping on to infinity. So it's like, it's a pump and dump that worked, you know? And if you look at it, this ecosystem, there is a valuable community element to like getting people to actually have non-custodial interactions, control their actual keys. More people control their keys for an NFT wallet than people who are crypto adopted. They like have their money on an exchange. They're like, oh yeah, I bought some Bitcoin. It's on my Coinbase. But people who have NFTs, that wasn't an option early on. So you had to get a MetaMask. You had to get your keys. You had to control your own keys. So there was some type of like social benefit sort of there that like it forced people to self-custody assets. Whether those assets have any meaningful value or not, like, well, we all know art has no intrinsic value. So like there it is. Art has no intrinsic value, right? And like, but millions in FTX and Celsius funds were used to buy like multi-million dollar user funds used to buy multi-million dollar assets. Like, I mean,
yeah,
it's going to be part of the conversation.
They found an opportunity to trade something with liquidity and then sell it to the next marginal buyer. But I mean, NFT as a technology, let's not stray too far away from what we're actually focusing on here. Is, I mean, like the actual technology itself, underlying technology itself, NFT, non-fungible token, is what is the most important thing here, and is not even close to being used to its full potential.
But what's the definition?
I mean, it's done a pretty good job of doxing.
Yeah, Costy's right about that.
It's done a pretty good job of doxing everyone's wallets. That was the first use case.
Okay,
and now, I mean,
can I make
there's a lot of arguments for...
Guys, can I make a suggestion? Once we have crypto established as the new financial powerhouse that everyone is using outside of the control of the government, their money, their rights, and then once we have established that, let's go to crazy shit like NFT, right? But right now, that is not the priority.
I'm sorry to tell you, Kim, but the NFTs are going to bring it before the crypto does, and it's already proving it. I'm having more
guys, I don't know if it's obvious at this point yet, but we are in a massive bubble with a lot of this stuff. Here's me, an unbiased third party. I'm not a doomer. I'm in fact love the space, but we are in a massive bubble. And that's just the hard truth about it, that like if you look back, we'll compare it to 2000, where everybody heard about this new thing called the internet and wanted to build on it. You have these various companies, you have Amazon, you have Stratec, you have Google, Yahoo, etc. building. And everybody wants to build. Everyone thinks they're a web developer. Everyone wants to build something on Web 2, so they start building it. Everything pumps. You get to a point where everybody owns these.
Can you just be quiet for a moment? We have thousands of FTX people here that have lost their money. They don't want to hear any of this shit. This is a sideshow. Let's focus on the core topic here, which is, number one, can exchanges be trusted? Number two,
no.
Is crypto about speculation or is it about utilization? And number three, what do we need to do to disrupt the financial system as it is and replace it with something that is better for us and not for governments or corporates? Those are the three core topics here. NFT, to me, a total sideshow at the moment. I don't want to talk about that. I want to focus on the topic that matters.
But Kim, it's not just what you want to talk about. Look at the room. The room is full of NFTs.
Kim,
like, bro,
I think that the last question that you asked, which was like, how do we actually build a more open and decentralized financial system that benefits individuals over, corporations, governments, et cetera. I think that NFTs are going to play a role in the functionality of that system, or DIDs, whatever chain this ends up emerging on. However, I agree with you, like bringing it back to base, which is that like there are thousands of people here who were probably affected by what occurred with Sam. And I've been in spaces. I was on spaces all week. I told people who were in my spaces, get out of FTX. I was running a space saying CZ was going to dump when his tweet went live, right? And, I've never trusted centralized exchanges. Since Mt. Gox went down, I've never trusted a centralized exchange. If I have a balance on a centralized exchange, it's momentary. It's like it's coming in and I'm withdrawing it to fiat, or I'm just using it because like I need to go to another chain, or I need to do ETH to Bitcoin. I do side shift a lot for that now. Like I've never trusted them. And I got a call last year, April, and someone was like, I think FTX is insolvent. And like, I respected them enough to take them seriously. I moved everything off of FTX back then. And this is something that's happened in every cycle, right? We've always had at least one of the major exchanges after each halving cycle. A major exchange has gone belly up and been revealed to have been using customer funds. And this time it was just more than one, which we should think is natural, given that like we had a larger rate of adoption, more surface area, more people than ever participating in the ecosystem. It was a matter of time. When FTX went down, I said, guess what, everyone? There's going to be a big hack at some point in the near future. People are like, what? I'm like, this is how it always happens. If you've been here for a while, it's like a cycle. It's like, you know, snow falling in the winter and grass springing up in the spring. Like it happens cyclically over and over again. And yeah, now we have an opportunity where it's like, get out from the distractions, get out from all of these VCs that were all obviously just like trading paper with each other and creating fictitious paper valuations on vaporware products and trying to offload to exit liquidity to the next guy. And guess what? The Bitcoin blockchain isn't going anywhere. The Ethereum blockchain isn't going anywhere. They're going to keep being there. People who are building infrastructure and layer 2s and ZK snarks are all still here. They're still building. Like Sam going belly up with his little leverage Ponzi. He was already doing layered spoofing. Everyone was aware that he was conducting layered spoofing. And it's just like, these are things that occur when you have order books in an under-regulated market. Like layered spoofing is illegal in TradFi. People can't do it because if you do, they're going to be like, wait, like you weren't intending to buy, you never bought, you were just spoofing the order book. That's a crime. Do not pass go. Do not collect $200. Go to jail. Because there's no oversight, Sam was spoofing the order books all over the place. And he was extracting way more than just the customer deposits that were lost, which I think hasn't been touched on enough, is like the amount from stop hunting and liquidation incentives and all that stuff. This money didn't get the idea that this money got degen gambled and is just magically evaporated is like laughable to me. It's laughable to me. Like someone got the money. There's a big bag somewhere. It was easy to see that these issues were there because Bitfinex has always led the Bitcoin and Ethereum markets in terms of market depth. It makes sense. They print the tether. That's where the market depth is. Binance has always been number 2. They fuzz their shit because they own coin market cap and everything like that. But over the last few weeks, FTX's wallets have had less money in them than the 2% market depth that was being broadcast on the order books. That means that you know that the orders are being spoofed and that they're fake. Like there isn't enough money there isn't enough money there. The depth on the 2% depth is higher than the amount of money in the wallets. They're spoofing orders. They're stop hunting people. They're squeezing people. They're taking people's money. It was right in front of everyone. Whether or not there were proof of deposits, there were still indicators that showed, if you look, like how does FTX all of a sudden have $190 million in 2% depth? And like their hot wallets don't even have 190 million in tether in it at the time. Like, wake up! That's just on Bitcoin.
Let me ask you a question. I mean, great. Firstly, great. Thanks for bringing it back to topic. Awesome points. Is Binance doing the same?
I mean, their matching engine failed last May. There are a couple good articles about it. Are people performing layered spoofing? Are they stop hunting? As much as they can without exhausting the inflows of liquidity onto their exchanges?
These practices came from Huobi, OKX, BTCC, and Binance. That's where they all came from. They wrote.
Yeah, this shit's really, really old in the space. To Simon's point, there have been dozens of mostly predominantly Chinese exchanges that have done this shit for like multiple years. This is not anything new. It's just new that a white dude perpetrated it.
And where did Binance come from? OKX. Where did he get?
Bro, that's actually so funny that you said that, but that's actually pretty accurate, dude. It's like it's been going on.
Yeah, look, Simon and I have known CZ since he worked at OKX. He literally learned all this shit from Star. Just get your shit off a fucking exchange. Like, there are ways to trade outside of a centralized exchange.
Ta-da.
But even if you need to trade it on an exchange, trade it on an exchange and then just send it off. It's not expensive to do that.
Also something I heard earlier that I think is inaccurate. I heard a lot of people saying like, oh, cold storage, get yourself a hardware wallet. That's the only way to be secure. Like hardware wallets are not as secure as you think they are. And like my business partner was the former.
Oh, geez, please don't give us that.
No, they are
bullshit. I'm calling you bullshit on that.
Just listen, dude. My business partner.
Put it in context. People do need to get into
my business partner ET was a senior dev for MetaMask. He worked side by side with Aaron, the founder. Okay, he built Lavamos, supply chain security infrastructure. Not one of us on the team has a hardware wallet or ledger. We all store keys encrypted on flash drives, like regular run-of-the-mill flash drives. And for security, we use BLS, TSS, or multi-signature wallets. It's the only way to be secure is to use multi-signature.
No, we get it. But I did say it's a progression, right? You start an exchange and you may have it to custody, and then you download it on your phone.
The progression is you learn what the technology is and how it works. And then you calculate your threat model and risk vector based on the amount of liquidity you are dealing with, you implement appropriate operational standards based on the amount of liquidity.
It doesn't matter average retail.
I do have some breaking news here.
Go ahead, Chet.
I do have some breaking news posted in here from Bloomberg. Bloomberg, and this is in relation to the U.S. Treasury Secretary now. U.S. Treasury Secretary Yellen now is saying that the FTX debacle essentially shows a need for more crypto regulation. She said, quote, it shows the weakness of this entire sector and a need for very careful regulation. She said, in other regulated exchanges, you would have segregation of customer assets. The notion you could use the deposits of customers of an exchange and lend them to a separate enterprise that you control to do leverage risky investments, that wouldn't be something that's allowed.
Isn't that how banks work?
This is very important that you've mentioned this.
It is. It's also not allowed in crypto, so it's propaganda. That is illegal in crypto.
This coming from the people that got rid of Glass-Steagall.
This is coming from Elizabeth Warren. Come on, y'all. It's
exactly what they want you to legalize. They want to legalize using
to just launch down the rabbit hole of this entire thing. There has been plenty of speculation that a lot of these people were put in place here simply to regulate cryptocurrency, like far ahead of time. It's going to turn into a conspiracy at this point. Like Kim was asking me about my theories earlier on the entire thing, but Suzu, the tweets have resurfaced of Suzu of him calling out FTX early on for the fact that they can use it as collateral and borrow against it, et cetera, et cetera. And ultimately, they're the ones that liquidated Three Arrows Capital and got to a point where they licked everybody and then got liquidated along with everybody. But in that same regard, right? Like this guy, think about it. Like, where did he even come from? I made a tweet recently about basically Sam's stage presence whenever he's up there talking in front of anyone. Like for someone who's a billionaire and is as talented and intelligent as he professes himself to be.
Cuffy, I'm going to cut you off there, man. Look, for people who have been in the space long enough, everybody at the beginning was a fucking autistic weirdo.
No.
Yes.
It's the way, like, no, even Anatoly.
Oh shit!
Like,
I just realized this was Marshall. Yo, Marshall, what's up, bro?
Marshall and us were there. When I spoke at the first Bitcoin conference, they were absolute nutbags.
Everybody, including now, like Simon and I used to be like terrible at speaking, and we still are. And it's just because we've done it so many times, we know how to like navigate our own social.
Well, right. It's just like he came out of nowhere and was just on stage speaking about the most important topic.
He was able to get on stage because he arbitraged the ever living dog shit out of Bitcoin in 2017. He made a ton of money. He had all the TradFi bros to back him up. Now he's speaking on stages. It's very clear how that happened. It has nothing to do with the fact that he was also a sociopath who wanted to steal tons of money.
Well, no, it's very obvious though that how those two things are now surfacing. I mean, and that's why I prefaced it with the fact that, okay, sure, this may be a conspiracy, but it's in hindsight, all of the red flags were there, and what we were dealing with the entire time.
Samwicks instead of Scamwicks for like a year, dude. They're Samwicks, not Scamwicks.
Exactly, they are Samwicks, and I was talking about it earlier, actually, Omakasi, about like watching the tape and how the orders will come in from FTX to liquidate massive FTX positions, and then you'll see them with Alameda, their quant shop, whatever it may be, market make the price back up after liquidating somebody for 7.
They take your money on their platform and directly trade against you to steal your balance, bro. Precisely. Like it's like not even it's
and that's
they're running the
stuff
books.
They would never show us like as a security company. That's stuff that they would never. That's code and repositories that would never, ever, ever in a million years be shared with anyone outside.
When someone say that they did arbitrage, bro, you have to look at the history of arbitrage, right? Like someone says like, oh, I did arbitrage. Okay, the history of arbitrage and minor extractable value goes all the way back to the Dutch East India Corporation. So basically you're stealing shit. Okay, cool. Got it. I know what your business is. Check. Like, I get where I get how you think about getting value for yourself. It's not by creating it or building it or mining it or anything like that. Like, you are literally just a middleman. You're just front running. You're a front runner. Like, that's what it is. And that's what Sam has always been. Just the scam to attract liquidity and market makers was by paying out funding in hourly increments rather than 8-hour increments. So if funding fees were 0.1%, then you're getting paid 0.1% every hour instead of every 8 hours. That drew a huge amount of liquidity from institutional market makers who take gamma neutral positions on the market. They buy spot BTC and they fill a short when the funding rate is positive. They sell spot BTC and go long with low leverage when the funding rate is negative, and they're collecting funding from the order book. When you're getting paid funding every hour instead of every 8 hours, that adds up a lot. When you're getting basis points compounding hourly versus basis points compounding every 8 hours makes a huge difference over a long period of time. And that's how he attracted all the liquidity to the exchange, and then he rugged everyone. And it's like, this has happened. Like anyone, Marshall's been here. I know Kim has been here. It's like the people who've been here a long time. It's like, yep, another day in fucking Bitcoin. Like pretty much like, oh, an exchange rugged. Like, yeah, did I lose anything? No, because I didn't have any fucking money on an exchange. Like, this is not 2014, dude. Yes, it's not 2014. I don't know why you have money on an exchange, dude.
Yeah, what the fuck are you doing? Oh, is that a hot exchange? Let me stay as far away from that as I possibly can. Yeah,
it's funny to me that people think that regulations could actually fix anything. Like, have you not seen the stock market? It's so heavily regulated, yet people still get away with the same shit.
Yeah, look at Bernie Madoff.
5,000 or 5 hours. That's my rule for exchanges. The funds on exchange are going to be less than $5,000 or there for less than 5 hours. That's the rule. 5,000 or 5 hours. That should be your rule.
Lehman's AIG should be a lesson.
But also a big failure is a big failure also is like, look, MetaMask is the #1 wallet application that people are using. It's not user friendly. The user experience is terrible. Consensus is printing 250 mil a year off of the swaps on MetaMask. the team was underfunded and they didn't provide the user experience and tools to scale with the amount of people that onboarded and wanted to onboard into the ecosystem. So as it became popular, yeah, MetaMask grew to 5 million, 10 million daily users or whatever, but the exchange was still easier for people because people are used to typing in their email and a password, and there's a user experience that people are attuned to, and people just, trust instead of verifying, I guess.
I completely disagree. I think anyone under the age of 30 hates putting in email. Every time I get logged into anything and ask me for a username and email, I just close it. For me, connecting a wallet is just far quicker, simpler, and they don't have any of my data points. I think that's a harsh generalization.
They have all your data points. Do not delude yourself.
But don't miss the point where
you connect to be selective, obviously, where you provide them.
If I can kind of recenter the conversation.
Emails.
I want to recenter the conversation here.
For certain
I want to. Kim, can you comment on the app?
All right, guys, I just muted everyone. Kim, do you want to take back control of the mic? Just brief the audience where we're up to and just give the speakers the mic accordingly, because I can't see everyone on screen.
Holy shit, man. This room went into
yeah, bro, I just got
total shit show.
The problem, I haven't slept since yesterday, as you know, so I don't know if things are out of control or if just my mind playing around. But if you could give the mic to the right person.
Yeah. So first of all, thank you for muting everyone, because it was painful to listen to it.
And I meant it very respectfully for all panelists. I just meant it with all due respect. I can't see who's speaking, and I can't mute individual people because my screen is fucked up. So that's why I muted everyone.
Every now and then you have a space or a clubhouse or whatever, and there are just some people who love listening to themselves, and we've gone off topic a little bit now, so I'm glad you did this and we can go back on topic, because what we are trying to do here is to be of service to those that have been affected by the FTX issue, and we need to keep that in mind, right? So they don't want to hear our viewpoints about off-topic matters. They want to be hearing about what they can do in this situation, what lessons they should learn from what happened here, and what we should all expect in the next few weeks and months to take place because of this event. And let me just dive into these topics right now.
As you dive, do you mind if I just ask you one quick question, Kim, that I had for a while, but I didn't ask you earlier? I heard one of the speakers mention that they got warning about FTX being insolvent since April. Did I hear that correctly?
I think someone mentioned that.
April of last year, bro, is the first time that I got the call.
And who's that? Sorry, I'm just trying. Is that you, Master Chef?
That's me. Yeah, it's me, bro.
And do you mind telling us who the call was from? Doesn't have to be exact name, but just an idea.
Yeah. So I'll be as specific as I can be. I got the call from a friend of mine who is one of the world's top experts in machine learning and has circulated around the crypto space for a while. He goes to Satoshi Roundtable. He would be pissed as hell if I said his name on a space. But he called me and he's like, hey, have some friends in the Bahamas, got some chatter that FTX may be insolvent. And he's like, don't keep any funds on FTX. And I was like, GG, thanks, bro. And that was the call. And he's someone that I know well enough and has been around long enough that, he wouldn't have, he's not a fudder. You know what I mean? He doesn't call with things like that. He had information from a credible source if he passed that information to me.
And you say April 2021?
2021, dude. The entire run up, you can see there have been articles written on it. The entire run up that began in July 16th to 18th of 21, when we ran back up to 69,000, was primarily engineered by Sam executing layered spoofing. I know a lot of people don't understand what that is, but I put the Wikipedia article up and pinned it to the top if people want to educate themselves as to what spoofing is. But the order book was spoofed up to those prices in that final run. And Sam was trying to recapture the liquidity because he was essentially the largest market maker and had the most liquidity with like Alameda Automation at that point. But in February, I think February 2nd or 3rd, a Bitcoin wallet that hadn't been active for a long time and is flagged multiple times as a ransomware wallet with 36,000 coin in it, unloaded 12,500 coin directly into the market, and then onto an exchange that it swapped for ETH, and then that exchange was subsequently hacked and all of the ETH was removed. So like there was dirty coin that woke up and got dumped into the market. The issue with layered spoofing is if you think you're in control of the supply of the free float and you're spoofing the price up, if someone actually has a spot bag and decides to dump it into your fucking spoofed order flow, it causes all of your algos, everything you set up that you thought you were going to go print your little super cycle and make it all back in one trade goes to shit. So someone basically woke up and was like, oh man, I'm gonna unload like $1 billion worth of coin right now, and I mean all those things popped up. It was like February 2nd or 3rd that wallet woke up, sent 12,500 coin to an exchange, unloaded all of it. The same exchange was subsequently hacked. All the ETH was drained from it, moved through Tornado Cash, and it's just like that's what happened. So the order book can be spoofed. The market cap to liquidity ratio of most crypto assets is extremely, extremely high. There's very, very thin market depth.
Can I shout out and round of applause to the reality in the argument Master Chef just made. 10 out of 10. Amazing.
Simon and Kim, do you mind if you comment on this? It's it just sounds a bit extreme. Like it's not like 2-3 months ago. It's April last year.
Maybe where I could
CNBC was still promoting them this
what
year.
Happens from here? Would that be more useful? Like what happens next?
Sorry,
what people do? Or...
say that again. Sorry, Simon.
Maybe I could add more service by helping anyone that's got funds on FTX. I can help them understand what's going to happen next and what.
Yeah, perfect. I'll make this the next topic of discussion because I think it's a really important one. Do you mind commenting on the information regarding the revelation since April? You or Kim or anyone else? Does it add up to you?
So I should disclose I'm a shareholder in Bitfinex, Kraken, Coinbase, Bitstamp, Shapeshift,
Jesus,
and other exchanges I've probably forgotten. So
billionaire Simon Dixon, man.
So I just want to disclose that because if I'm talking about other exchanges, I think it's important to understand, and I'm not pushing my own shareholding. I never have. I just always disclose so people can understand. But those types of practices, it doesn't surprise me because there's, it's the mindset of. So when I invested in Jesse Powell, I invested in his character as a Bitcoin OG that we met at the first Bitcoin conference that had a Bitcoin philosophy and was appalled by what happened at Mt. Gox and thought he could do better as a security guy. And his combination of his mission of what he was there for, plus his background and thing, is what made Kraken what Kraken is. When I saw Sam, I just see this trader that obbed, that came out of nowhere. And so that every shenanigan under the sun is because it's the difference between a long-term investor that believes in the industry versus a short-term speculator. They're going to do what short-term speculators do, which is everything that was just described. So it doesn't surprise me because we've seen wash trading, we've seen all of this stuff. And anyone that looks down the coin market cap and looks at these exchanges, the Q coins, the OKXs, the Huobies, all of these, and then the 60,000, copy and paste versions as well. All of it's happening everywhere. And so, yeah, it doesn't surprise me at all.
Kim?
I also want to mention I just pinned a tweet up to the top per a request from a listener and also a friend. Basically, you'll see the most recent tweet pinned. He says, "They came from an industry of finance. I come from an industry of cybersecurity. You crossed my field. Next time when you want to spoof the market from 28K to 69K for your political lobby, think twice." Excuse me. This tweet was amazing. I remember when he made this actually back in May earlier this year, and I was like, wow, par for the course. And while those that were aware of it, the money that was pumped into the market, the liquidity that was injected into it that allowed people to make tons of money, was not the most candid deployment of capital, we'll call it. So yeah, check out that tweet. There's a lot of good info in there. Shout out Hellspawn Crypto for digging pretty deep into this on a deeper level, like that Master Chef was talking about earlier.
But just to give you a bit of context on Hellspawn, I do think he's a great asset, and I love his tweets. He did have a lot of his funds frozen by FTX, just to give everyone a context. So that's kind of also a reason why he did the investigation. So it's, there is a bit of a conflict of interest that there's a reason why he did it, why he went deeper, and FTX kept freezing his funds. And I know they froze a huge portion of his funds, and he used it to run his business. But yeah, I just thought it's also good to give context like that to everyone, so when they see the tweet, they know the context behind it and what it actually means.
Yeah, Mario, if you don't mind, I think maybe a good direction here is what Simon was getting at, is where we think this goes is probably a better question for Simon. And I'd like to talk about maybe where the contagion can spread. If that's something I've been personally doing, making sure that my mind doesn't have any tertiary risk from people who have had deposits there frozen, et cetera, et cetera. I think that's, if you've had money on FTX, you're basically fucked at this point, and you're going to have to be an unsecured creditor. Beyond that, there is a high likelihood that other companies that may be a vendor of yours or you may be affiliated with have exposure risk, that have not disclosed it, and are in serious trouble. And so that's probably a unknown risk that most of the people just didn't think about, because there's so much craziness going on with the FTX stuff. But there's still a chance that other things and other places that you might have can be harmed.